Here with Patrick. Patrick, funny enough, I was the most intimidated to call Patrick out of every single speaker that is joining Recon. Did you? I think I told you that.
Yeah, you mentioned
And
it. Yeah.
and I think the reason why is when I got into real estate right at the very beginning, one of the first large conferences that I went to was Rain. And I went into it and I was like, this is one of the nicest venues I've ever gone to. These are some of the most intelligent speakers I've ever heard. And I've been in real estate at that point, investing myself, not in any community, no tribe, no connection to any coaches.
Yeah.
I go to a Rain event and it blew my mind. Just the overall quality of everything. It was incredible. And I saw you speak numerous times since then. And I've never had the opportunity to interview you and talk to Patrick like we are going to be discussing today and really kind of peeling back the onion. But you were definitely like when I called you, I was nervous. I told my girlfriend, I'm like, I shouldn't be this nervous, but I'm nervous to call you right now.
Oh, it's interesting, and because we've got the conference coming up, I'll share just a quick story about, a quality that somebody pointed out to me many years ago. And it was a longtime Rain member, and we were at a conference, and I share this story because there's a lesson in it for maybe some of the listeners. And we've got this conference coming up. And that was, he knew me well, but I'm walking down the conference one day. I'm in the back lobby, and he comes up to me and goes, "Patrick, can I share something with you?" And I go, "Sure, what's that?" And he said, "I know you well, and you still intimidate the shit out of me." He goes, "It's your facial expression or lack of, you always look so serious." And I'm going, "Oh, isn't that interesting?" And back in those days, it was really, we wore suits and ties, and we did all things far less or far more kind of, we'll use the word formal, but, not like we are today so much in terms of fashion. So what I learned from that is a reminder to myself is that by nature, I am straight faced. I don't have a lot of big expressions on my face. I have to thoughtfully, intentionally do that. Number one. Number two, at that conference, by the way, what I did is I took my suit jacket off, I loosened my tie, and I rolled up my sleeves. And it was a game changer for me. All of a sudden, I'm having conversations. People are approaching me. It really changed the dynamic for how people viewed and saw me. Now, I share that with anybody listening and or following up on this is because when we go to these conferences and we want to network, we want to meet people, we have to take responsibility for how we're occurring and how we're showing up. So I got that feedback and I made those changes, and I actually got results from those changes right away. So to what you commented on is that I've had that come up with me before. And as you've learned, I'm pretty easy and pretty fun and generally pretty good to work with. But Absolutely. It is by nature, I've got this non-expressive face and my body language kind of. And so anyways, I share that because when we take responsibility, when we have that awareness, it changes how we interact with people.
I love it. And if you have a moment and we see you at Recon, come up. I mean,
come up,
Patrick's going to be in the, come
yes.
up and say hi, ask him a question. He is an everyday person, and you'll learn that, he's an everyday person with a ton of experience, a ton of knowledge, and his willingness to help is unparalleled.
Yeah.
And you will see that instantaneously within the first couple minutes. So go up and talk to Patrick. If you don't, I'll have to bring your hand. I'll probably have people coming up to me like, "Hey, Calvin, is that Patrick over there?" And I'm like, "Yeah, that is." And he's like, "Can you introduce it?" Yeah, absolutely. If I need to drag you over for an introduction, I absolutely will. So,
well, I am aware of that reputation. I do my best to bust through it, but
And for those of you that haven't been introduced to Patrick, he is the CEO of the Real Estate Investment Network, which is RAIN. And it has been one of the most successful organizations in the investment world that I've ever seen, been a part of. And it's been a huge stepping stone. Yeah, that's a long time. And I can honestly say, I bet you, like anybody that was born in, 80s or earlier, I bet you 90% of people, RAIN has made a positive impact in your investment journey in one way, shape, or form or another. There has been a ripple from the network that has allowed you to do more, be more, and just be more impactful. So I can honestly say that with confidence, and I have not said that about any other organization yet. You guys do amazing things, and if you haven't had an opportunity to check them out, you definitely want to. I am telling you, massively impactful.
Thanks for that, Kelvin.
You also have a very highly successful podcast, The Everyday Millionaire, as well, which is fantastic. And if you haven't had a chance to check that out, you want to check it out. There's lots of golden nuggets that you speak on there, and you speak a lot on mindset, which is something that I really value because I think it starts with mindset.
Well, you're going to be so the Everyday Millionaire podcast has been 8 years. Stephanie and I, my wife, who's a mental and Olympic performance coach, we started doing Mindset Matters 3 years ago, and we produce a show every week, usually 30 minutes, 20 minutes to 40 minutes long, depending on what the topic is. And that has turned out to be quite a hit. So both of those podcasts, they kind of fall under the umbrella of the Everyday Millionaire. And it's fun to do, and we've had lots of success with it. It's a cool podcast.
Absolutely, yeah. You're listening to this, you're gonna leave this with a lot more resources than when you first came in watching this today. So let's go ahead and get started. Today we are talking about the economic fundamentals of real estate investing. So let's talk about what those are. Let's bring light to what the economic fundamentals are, and then what we're gonna do is once we uncover all of your tools, the way I see it as you're going into Home Depot, you have all these tools to choose from, but you don't know where to use them. You don't know when to use them, the order, and how to. We're going to uncover them first. Let's see what the tools are available. What are those tools, Patrick?
Well, there's a couple of things that we have to consider with real estate. So let's break it down, try and be as pragmatic as possible. First and foremost is that we want to make data-driven decisions, not emotion-driven decisions. And when we get into a hot real estate market, and let's use Alberta as an example. We saw what was happening and is continuing to happen in Calgary, although there's some changes around. But Alberta as a province overall, we start to see that people get excited about this real estate cycle, this boom cycle in the world of real estate. So first and foremost, we say, well, how do we take the emotion out of it? What is the data? Well, as investors, we want to look into the future. So we're investing in real estate for a future gain, whether that be equity appreciation, cash flow, whatever that might be. So we want to look into the future and say, well, where is real estate going? Now, as realtors like to hang on and hang their hat a lot on historical data. And that's good information, but does it really kind of extrapolate to say, well, that was what makes sense in the future? So here's how I position it. First off, having historical data is good to know. What's happening today is good to know, but as investors, we want to see the future. We want to know where real estate is going. Is our prices increasing? Are rents going up? Is there opportunities for fix and flip and rent to own? And what are the strategies? That's all data driven. The data that we want to use is the economic fundamentals. So first and foremost, we look at what is the economic health of a region. When we use GDP as one of those examples, so gross domestic product, it speaks to productivity. When you have good GDP growth, it represents that we know that there's good job growth. When there's jobs, we see population growth. When we see population growth, we know people are coming into the area, and generally those individuals will rent. When we start to see a higher demand for a limited supply, we start to see rents go up. And then there's a cycle where after a couple of years, those individuals who are renting, many of them will try or want to buy a property, which will put upward pressure on the prices of real estate. Now, there's lots of nuances within all of that, by the way. And ultimately, the opposite can occur. When we see negative GDP growth, of course, we see people leaving the city, leaving the province, because they're going to go find a job somewhere else. And then that's where we start to see real estate prices and rents and things like that go down. So it's all to say that when we look at the data, we can make decisions and have a kind of a strong data-driven decision into what's going on in the future. Now, that's one aspect of it, and I'll leave it there, but that's ultimately what we're looking at. So when we look at what's happening in Ontario, for example, when we look at what's happening in British Columbia, there's other things that are happening economically, and we're starting to see the fallout in real estate in some sectors for sure, and some property types, particularly in Ontario, but as well in Vancouver and area. And so we start to say, well, my job as a real estate investor is to have my money work harder for me than I work for my money. Where do I want to put it? And sometimes you say, well, I want to put it in my backyard, but it doesn't make sense, which means I have to get outside of my backyard, which may mean if you're in Ontario, BC, many are looking at Alberta for the right reasons.
Absolutely. Absolutely. And I think that's where a lot of people make the mistake is instead of focusing on where we are today, it's where you're going to be tomorrow. Because if you're looking at investing in a property, whether it's one unit or a multifamily building, you want to have as minimal question marks behind that purchase and as much due diligence up front. And I think it starts really with location first, right? It's being able to identify where do you want to be able to focus on your investment that you can feel confident about, because you can buy what's a great investment today, but in 6 months from now, that vacancy rate can shoot right up. Those rents can drop and you could be left with an investment property that you can't even exit, which is horrifying. And we have seen it before. And that's why it's important to listen to some of these economic fundamentals to prepare you for it. So it's less of a guessing game. Real estate investing doesn't have to be a guess, does it?
It doesn't have to be a guess. And of course, we talk about real estate investing, not speculating. What happens in an emotional driven decision is you're actually speculating. Let me take you back to 2019. Now, interesting about 2019, we could start to see what was happening in Alberta. We actually released a COVID report in December of 2019. We started doing research on COVID in the final quarter of 2019. We released a report on COVID in 2019. Now, we didn't know what it was going to look like, but we'd already started to hear and get feelers out around in this thought process around a pandemic. Now, having said that, we literally on March 7th had what we called an ACRE event, the Authentic Canadian Real Estate program that we teach. We had that event March 7th in Calgary, had several hundred people attend it. The next weekend, we were locked down. Now, I share all of that because it was a very frightening and emotional time, as you will recall and any listeners will recall. However, we didn't change our narrative around what was happening in Alberta, and we got lots of video on it. We can draw the line and show you where we went back, and we started talking about specifically about Calgary. In June of 2020, we were beating the drums from the mountaintops within our community going, get in and get into that real estate market in Calgary. Make those decisions on what strategy you're going to use to invest in real estate. But Calgary is a great market. Now, for the REIN community, for those members who took that guidance, used that strategy, they started buying real estate in Calgary literally in 2020. They were doing deals when everybody else was sitting on their couches doing nothing. And so because they were locked down in fear. I get the fear. I was afraid. I had businesses doors were locked. I had staff. I mean, we had a lot of stuff going on as well. But when we looked at where the real estate market was going, it was that obvious to us. So we were talking about Alberta in general. As we get ready for the conference in Edmonton, by the way, Calvin, we start to look and we know there's a couple of things is that Edmonton historically lags behind Calgary. People are complaining right now, Calgary hard to cash flow and all the stories around it. But there's more cities in Alberta than Calgary and Edmonton, although those happen to be the biggest. There's other areas, and Alberta overall is very strong. And we look at what's going to happen in Edmonton, and we're starting to see the future show up.
Mm-hmm. And one thing I wanted to touch on as well is, don't feel like you need to be an expert yourself. If you don't feel comfortable forecasting, have a strong power team, have other people that help support you, book a meeting.
That's critical. But let's not step over that, because we can have the data and, I'll still, I look at all the data. I mean, I have a research team. We're looking at data all the time. I'll still reach out to a Calvin or one of our trusted partners and a realtor, a mortgage broker. I'll go, what are you seeing? What are the boots on the ground? I'll talk to REIN members who are full-time investors saying, what are you seeing? What is happening? Boots on the ground. You're in the trenches. What are you seeing? Because when you look at GDP growth or unemployment, when you look at economic fundamentals, there's always a lag. So you have to be in it. And so right now, and to your point, it's so critical that you surround yourself with, and we qualify it, and that is investor-focused experts, realtor, mortgage broker, lawyer, to name three. Those have to be investor-focused. And what do I mean by that? There are some amazing realtors out there, Calvin, that do an awesome job of selling homes. End user, you want to buy a beautiful home, you're going to live there for the next however many years, great. That's a totally different thought process than a realtor who's investor focused, who understands cash flow, who's looking into the future. What's the gains? Where can you build appreciation? What kind of rents are happening? What's the demand for that area? What's the future? And, when we talk about geographics, a good investor focused realtor will see the future because they're looking into, hey, listen, LRT is coming through here. There's an expansion of the freeway. There's an off ramp coming right into this neighborhood. Oh, guess what? There's a power shopping center that's going to be here. That you start to look at what is happening in a specific region. That comes from the thought process of being investor focused so that you can see the future of where real estate is going.
Mm-hmm. Yeah. Excellent point. And I'm hoping anybody that's listening, it kind of takes the weight off your shoulders, where it's like you don't have to learn to be an expert of economics and go to the university for the next 4 years to be able to invest in real estate. That's not required. Literally surround yourself with the right people. Make one phone call today and ask questions. I mean, there's no, you're never too late to start. And one thing that I remember from when I first started is Rain has a graph. So Patrick was speaking to the process of rent prices going up, property value going up, and there's a chart. There's a chart or a graph that you have. And Patrick, maybe you can send it to me. I probably still have it, but I can post it afterwards. And it's a really, really digestible way to be able to understand how that works when it comes to the GDP, when it comes to lower vacancy, increased rental rates, and then how it affects property value. It's a very I love it.
I'm not going to share it until the conference. That's it. Yeah. Full stop. You want to learn about it, you get to that conference. You get to our conference, and we're going to show you exactly what that all means.
All right.
There's a couple things in behind this too, Kelvin, that I think we would be remiss not to talk about, which is, there are right now what we try and stay focused on the data, but we can't negate the impact of what we call influencers. So for example, and this is where so many investors shut down. When I look at what's happening in the market right now, so many new investors are going, nope, real estate's not for me. There's a bubble. It's going to crash. We're going to drop 60%. There's all sorts of stories and headlines out there which are driving the emotion. These are what I refer to and what we refer to as influencers. Now, what are influencers? Well, influencers are those things that happen in an economy that are shorter term. They're emotion driven. Interest rates. Guess what? As many years as I've been investing in real estate, interest rates start to go up. It pisses me off. It's like, oh crap, I got to deal with this now. My cash flows come down. How do I negotiate differently with the bank? What do I got to do differently? But do I think interest rates are going to stay high for an extended period of time? Absolutely not. As a matter of fact, I believe that they will come down. Now, originally and I've made all the wrong interest rate calls, by the way. I don't think I've hit one. I had actually earlier on this year, given what was happening globally, I said, there's a chance that they're not going to reduce interest rates at all. And now they're already working in some of those interest rate reductions. So I digress. Interest rates cause a lot of emotion. Politics cause a lot of emotion. These are influencers that take real estate investors and put them on the sidelines. And so we have to understand that influencers are going to happen. They're going to have an impact on the real estate market, but it doesn't mean that you stop investing. It doesn't mean that you stop working at it. And to your point earlier about you don't need a university degree. What you need is the education. So Rain for 30 years has taught a system. It's a systematic process, 16 steps. Just do this and you'll be fine. The point is that never stop learning. Now, a lot of real estate investors, very successful, savvy, we'll call them sophisticated investors, are sitting on the sidelines right now. But they're not sitting on the sidelines. They're looking at strategies. Some are expanding on their education of the strategy they're going to deploy. But what they're also doing is they're looking for opportunities, because in these kind of markets, it's where we start to see motivated sellers, motivated vendors, those individuals who are going, I got to get out. They got to move. There's all sorts of reasons. There's motivated vendors out there. And so there's deals to be had. There's opportunities to be created. And we just have to step outside of this headlines of all of the things that are happening in the world, what's happening in politics. I mean, gosh, those are hot topics on both sides of the border. And when we start to just step out of it, counterintuitive is don't follow the crowd, lean into it. Doesn't mean you're throwing money up against the wall to see what sticks. You stay pragmatic, but you stay in it. That's where opportunities show up.
Mm-hmm. Yeah. Yeah. Fantastic points. And I know a lot of you out there, the way I see it as, it's kind of like a compass, and you want to find your North Star, and your North Star is your goal of real estate. What are you trying to accomplish out of real estate? What's the why? And everybody's why is a little bit different, and everyone's goal is a little bit different. And that's what, that's my favorite part about real estate is I love hearing your story, and I love hearing about the journey that you want to get to. And then it's us working our way backwards to achieve that. So I think whenever I attack real estate or real estate investing, I always start with, what's my North Star? What's that direction? What is that direction I need to focus on? Once you have that North Star, it's a lot easier to see. If you don't have that North Star or that clear goal in mind, and clarity, I think is a big one. It's going to feel like a compass, and it's going to feel like you're in the Bermuda Triangle and you're just going like this. You're just doing circles, and you don't really have that direction, and you're just picking up too much data and you don't know what to do with it. So if you're listening and you feel like that, and you're kind of like in this blender and your compass feels like it's doing this, it's maybe because we haven't really isolated what our goal is, or maybe it's not a powerful enough goal with a strong enough why behind it. And I think understanding what that is, and sometimes just speaking about it, being able to talk to somebody about it. I mean, call your friend and just speak about it. Sometimes that will help with that clarity. Once you figure that out, it's going to help with that direction. Now, Patrick, if I have a goal of whatever it is, and I know where I want to go, and I'm going to say I'm going to use anywhere in Canada that I'm willing to invest in. Okay, so I'm open to anywhere in Canada. I'm willing to invest outside of our backyard. And I think investing outside of our backyard has been increasingly popular, especially over the last half a decade. What's the next best step? So I know that I'm willing to invest outside my backyard. We talked about some of the economic fundamentals in the beginning. What would be the next step that you would take? We talked about GDP. What would be that next step?
Okay, so let me back up one step and just kind of add to what you said earlier, Calvin. Is that there's that whole thing about why are you investing in real estate? And that you talked about, it takes some clarity. So for 2024, Stephanie and I had a theme, and even within our coaching programs, we have a theme called clarity equals velocity. We actually did workshops around that, clarity equals velocity, because when you have that clarity, you actually can move forward. You've made decisions, you can make decisions because clarity equals velocity. So when we have that clarity, now here's the point of this, is back to what you said. When we have clarity of what is it we're trying to achieve, what is it we want real estate to do for us? One of the, I think probably in the real estate investing industry, one of the biggest mistakes that get made is investors who say, well, I'm going to buy this property, I'm going to buy and hold, it's going to cash flow $500 a month, and I'm going to put $500 a month in my pocket, additional income, I got this handled. And then they start to realize very quickly that you will not draw that income. You will not draw that $500 a month in the early days of owning that piece of property. It's going to go back into that piece of real estate. So buy and hold strategies, for example, are rarely effective for income today. They can be, and depending on property style, et cetera. But my point is that what is it that you want that real estate to do for you? If you need income today, then you're going to look at it and say, well, what do I do that has a strategy that would actually put money in my jeans today? So that's the first phase of all of it, is making a decision saying, well, what do I want from real estate? So when I started investing in real estate 25 years ago, I was looking into the future as a business owner. I didn't have a pension fund. I didn't have that. So I said, well, I'm going to build my own pension. I'm going to use real estate as part of that strategy. Now, having said all of that, when we get clear on what that is, the first thing and the next thing that we need to do is get our financial house in order. At the end of the day, you're not going to buy a piece of real estate without understanding what money you need, where do you qualify for a mortgage, how are you going to finance this project, and you got to get your financial house in order. That means working with an investor-focused mortgage broker who can look at what you got going on. Again, clarity equals velocity. They're going to come back to you and go, here's where you're at. Here's what you got to clean up. Or no, you're awesome. You got a down payment? Beautiful. So then you can start to deploy that strategy. You know exactly where you are financially. You know what the chances of the bank saying yes and what they're going to say yes to or what they're likely going to say no to. that drives a whole different decision, because then you say, oh gosh, I got to raise capital or I got to have a joint venture partner. So getting your financial house in order is always the next step. You know that as a realtor, if somebody phones you and goes, I want to buy some real estate, what's the first question you ask them? How much money you got for a down payment? What are you looking for a property? Have you talked to a mortgage broker? What do you qualify for? Because otherwise it's just you're kicking tires. You don't know until you know where you are financially. So again, that's part of the process, part of the system of getting it handled.
Absolutely. Yeah. And so if I was looking at investing in Canada in general, Patrick, what's that step? What is that initial step that you would take? How do I know whether I want to invest in, we're going to use the big three, because it's funny when we talk about real estate, it's always Ontario, it's always BC, and it's always Alberta. But we always leave all the other provinces out. Do you notice that when we speak about real estate, like especially lately, it's like we only have three. I think Americans, when they listen to us, they think we only have 3 provinces in Canada because there's only 3 that we ever talk about.
Yeah. But when you look at, let's say, Saskatchewan or Manitoba, you're talking about populations of an entire province of, what I've lost track and I've got too many numbers in my head, 3 million, let's say, for an entire province, or less than, like 1.5 million or something. It's the populations are very slim. So, Saskatchewan is, if you're going to invest in Saskatchewan, great province, economically very strong, agriculture driven primarily, but there's certainly lots of commodities, lots of resources. The point is that when you're investing in Saskatchewan, history will show you that not a lot of appreciation, but really good cash flow opportunities in Saskatchewan, for example. So when we start to say, well, where are we going to invest? We go to what we see, most in the headlines, or we are talking to a realtor, or we talking to somebody that we know, that you need to look at a specific area. So, for example, we look at Southern Ontario right now, the headlines are screaming, Ontario's falling apart at the seams. You can't do this, you can't do that. It's too expensive. You can't get cash flow. Yet if I talk to JG Francoeur, a good friend of mine, he's in Peterborough, he's in Lindsay, he's in different cities, and he's going, nah, dude, I'm getting deals all the time. Now, here's a guy who's a full-time investor, and he can do some development work. So again, what is your strategy? What can you do? Now, I look at Alberta, for example, and as many people are looking at Calgary, I'm going, okay, what's wrong with Lethbridge? What's wrong with Medicine Hat? Have anybody sat and really looked at what's going on in Red Deer lately? Oh, by the way, Edmonton is only just starting to pick up. Does that mean you go into Edmonton, you go all in, and because condos are $150,000, you buy a bunch of condos? I'm going to tell you, don't do that. But if you're in Ontario, this is what happens. If you're an Ontario investor looking in Alberta, you're looking at Calgary, and you're going, a condo for $300,000 for 200? Gosh, I'll take a dozen. It's like it's so cheap relatively, and they're buying for the wrong reasons. They're buying because it's cheap rather than because it makes sense based on cash flows and or appreciation or whatever. So my point is that pick a city, look at it, then look at the economic fundamentals, and then make a decision and say, okay, based on where this city is going. And really what you want to do is you want to find those cities that are progressive. You want to find a city or town that, with the Economic Development Office, they're being progressive in terms of how they're looking at building infrastructure, how they deal with business, how they expand. And then you can start to make decisions from that. But once you choose a city, for whatever reason it comes across your radar, then you do your diligence and go, okay, why would I invest in that city? Why that real estate? And where do I see it going in the future?
Mm-hmm. And events like Recon, I think, is a perfect opportunity because, like you said, you pick up the phone and you call those that have boots on the ground, because we do understand that there's that lag time. I mean, if you go on, there's great publications, like I know Zillow, RBC has a lot of really good publications on real estate, CMHC. There's so many strong bodies, but a lot of times, they may not be publishing them until like 6 months at a time. And you might be in that break where you don't really have that certainty. So sometimes picking up the phone or going to events, go to these events. I mean, go around, ask people, where are you from? Where do you invest? Tell me more, right? And that's such great intel you can get in one room. So you don't even have to pick up the phone. You literally can meet these individuals, gather their contact information, and that can help accelerate your real estate journey. So if you want to be able to to really gain that clarity, like we talked about, figure out your goals, and then see if there's some direction that you can gather by having these conversations. And then one thing we're also going to be speaking about at Recon is what type of professionals do you need to help make those stepping stones? You know, your real estate journey is a bunch of stepping stones in this direction. And who do you need and what do you need to be able to achieve that? Do you need money? Do you need a working partner? Do you need an electrician? Do you need a realtor, a mortgage broker, lawyer? Do you need a coach, right? Do you need resources like a fantastic podcast to keep you aligned and show you your blind spots? Because that's a huge thing, right?
Big one. But there's a fundamentally, and not a but you know, when you think about the lineup of speakers that you've arranged, and only because I saw Wayne Hillier on this on our broadcast here pop up, you know, you look at somebody like Wayne, who's been doing this for a number of years now, but here's a guy who's educated himself extensively, you know, is in the trenches every day, is committed to doing what he does in his own real estate portfolio, but supporting others. So he's in it every day. Like, that's just one example. You know, I think you got Tim, you got Alfonso, you've got a number of speakers that are literally, that's what they do full time. They're not only full-time speakers, but they're full-time real estate investors. They're in it every single day, having conversations with people that are, you know, next level. So, you know, for example, and you're like this, Kelvin, is that when we look at what's happening, let's say in Vancouver, or Toronto, I mean, there's developers, and when you start having conversations with developers, you can get really, what is the economics behind what's really happening? It's next level. Now, if you're just an investor who's, I got a full-time job, you know, I put in my 40 hours a week. This is something that I want to do. I'm going to grow my portfolio. I want to create a financial future by holding some real estate. You're not in it every day. So it's absolutely critical that you put yourself in the right rooms, that you surround yourself with the right people, because you're leveraging the experience and the knowledge that of those that have gone before you. Again, within REIN, we have a system, we have a process, because it's proven. People, like, literally, we've had over 200,000 people go through our various programs over the past 30 years. $5.6 billion worth of real estate. And we don't sell real estate. I want to just make that really clear, but we track it through our award system. $5.6 billion worth of real estate is what the REIN community has transacted. So there is a lot of experience, a lot of mistakes made. Learn from others' mistakes. Don't make them if you can avoid it. It's way less expensive that way. But that's really, you know, the fundamental of getting to a conference like this is going with an intention, going open-minded, being a little bit courageous in terms of meeting people, having conversation, asking great questions. So that's a part of getting to a conference like this.
And one of the right people that you want to meet is you, Patrick. So make sure you do it. It doesn't matter what, if he's smiling or whatever face you're making, go up and say hello. You want to, trust me, and you'll appreciate it afterwards. And like I said, Patrick is endless when it comes to the resources and the resources he's going to be bringing on stage. We're excited to see all of you at Recon September 21st and 22nd. Patrick, it's always a pleasure. I always enjoy chatting with you, and thank you so much for so much value today.